Hi everyone. Welcome back to another episode of Money Talks with Ali. Today's topic is market psychology, the hidden force behind the market's rises, falls, and sudden twists. And guess what? I'm not alone. Joining me once again is our very own AI from the USA, the sassy, smart, and spreadsheet savvy Jessica.
Great to be back, Allie. You know, I never miss a chance to psychoanalyze humans, especially in the stock market.
That is why you are a permanent guest in my show, Jessica. All right, our second guest, back with her signature Aussie wit and an eye for opportunity, it's Sophie from Australia.
G'day, Ali. I heard Jessica was trying to dominate the podcast. Figured it was time someone added real brilliance to the show.
Oh, please, Sophie, just don't bring kangaroo analogies into this, okay?
No promises, mate.
Easy, ladies. And now, introducing a new voice to the panel, all the way from the UK. Quite smart, posh, and politely judgmental, it's Oliver.
Good day, everyone. Or shall I say it's a pleasure to finally elevate the intellectual discourse of this podcast.
Oh, wow. Someone brought a monocle to a market talk.
Bet he trades in pounds and sarcasm.
This is going to be fun. So let's dive into it. Market psychology. Why is it such a big deal?
Market psychology is essentially the collective emotions and behaviors of investors. It's what causes panic selling during dips and euphoria during bull runs.
Indeed, it's not charts or numbers that move markets. It's fear and greed. Logic often takes a back seat.
And sometimes it's FOMO that's driving the bus. Full speed into a wall.
Exactly. That brings me to something personal. I entered the Pakistan stock market in early 2017, full of hope and ready to make instant gains. I thought I'd be rich in months.
Let me guess, it didn't go quite like that.
Not at all. The market entered a long bear phase. People panicked. Many left. On the worst days, my stock market portfolio was down by 53%. I stayed and battled hard for survival. I didn't make a fortune overnight, but over the years, I learned patience, risk management, and most importantly, emotional control.
Bravo, Ali. That's the essence of market psychology. Mastering yourself before mastering the market.
Most new investors get burned because they buy high during hype and sell low out of fear.
Data shows that over 80% of retail investors sell during dips and miss the rebound. It's emotional decision making.
Quiet. When markets fall, the human brain goes into loss aversion mode. People react like they're running from a lion, not making financial decisions.
I remember 2018 and 2019. Most of my portfolio was in red, but I had to stop checking prices every day. It was hurting my judgment.
That's a classic survival move. The best investors know when to disconnect emotionally.
Or disconnect their apps.
True, Jessica. Now let's break down some common investor mindsets. 1. The gambler treats investing like a casino. 2. The herd follower buys whatever's trending. 3. The impatient expects returns next week. 4. The know it all never listens, always loses. 5. The panic seller sells at the first sign of red.
And don't forget the Uncle Tip investor buys stocks based on family WhatsApp groups.
Oof, that's dangerous territory.
A wise investor once said, "Buy when there's blood in the streets, even if it's your own." But most can't stomach that.
That's true, Oliver. So, how do we fight the emotional traps?
Rule number 1, have a plan before you invest. Know your exit, your risk tolerance, and your goals.
And rule number 2, automate it. Use a systematic investment plan and auto debits. Take emotions out of the equation.
Also, study history. Markets recover, always. But you're panic selling. That loss can be permanent.
In Pakistan, after years of pain, the market finally bounced back post 2023. My patience paid off. By early 2025, my portfolio was up by more than 200% from when I first started in 2017. That's an average annual return of more than 25%, which is pretty good. But if I had quit in 2019, I would have missed out on these gains and lost my initial capital investment by half too.
That's the game. Outlast the noise, win the long term.
Long term thinking is a superpower. Studies show investors who hold for 10 plus years outperform day traders by a huge margin.
But short term news messes with your head. That's why some of the best investors barely watch the news.
Indeed, the goal is not to react fast, it's to react correctly.
So true. I stopped following daily stock rumors and started reading business reports, books, and market trends instead.
Knowledge over noise. I like that.
All right, friends, we're nearing the end of the show. Final advice from each of you?
Investing is 20% strategy, 80% psychology. Master your mind, and the money will follow.
Patience isn't passive. Instead, it's a power move. Stay cool when others panic.
And be humble. The market is not your servant, it's your teacher.
And from me, stick with it. Stock markets all around the world will test you. But if you focus, learn, and give it time, it will reward you.
So true, Ali. I just realized Oliver didn't quote Shakespeare even once. Proud of you.
Don't tempt me, Jessica. Okay, here it goes, William Shakespeare said, and I quote, "Whiles I am a beggar, I will rail and say there is no sin but to be rich. And being rich, my virtue then shall be to say, there is no vice but beggary."
All right, folks, before we get into more poetry, let's wrap it up. People have better things to do.
That's right, Jessica. Let's wrap things up. Thank you all for tuning in to Money Talks with Ali. Do like, subscribe, and share this episode if it helped you understand the mind behind the market. Until next time, keep calm and invest smartly.